Hello, everybody. Tony here. US equity markets finished lower on Friday despite a weaker than expected August job report that all but guarantees the Fed will resume its rate cutting cycle in just on 10 days' time. If this week's BLS labour market revisions reaches or exceeds the top end of the whisper range, which is about 650 to 900,000 jobs, calls for a 50 basis point rate cut in September will likely intensify. Now, regardless of whether the Fed kicks off with a 25 basis point or a 50 basis point cut in September, after the Fed's dovish pivot at Jackson Hole, where the risks of a labour market slowdown were highlighted as more of a concern than persistent inflation, the expectation is for more aggressive Fed rate cuts into 2026. And when we're looking at the rates market, we're seeing about 68 basis points of rate cuts priced for this year. Looking further out, there is a cumulative 150 basis points of rate cuts priced between now and year end. Let's take a look at the charts of the S&P and the NASDAQ to see where they are as we start this new week. Okay, returning to our NASDAQ on the weekly chart, what you can see here is that the initial signs of retreat from this weekly trendline resistance have been largely negated, and the NASDAQ is now eyeing this trend channel resistance coming in just above 24,000. So we need to keep this in mind. This remains a very, very important level. It has neither rejected nor accepted it. On the daily chart, what I'm looking at here is a little bullish channel, if you like, which it has broken above, which could have been the completion of this wave 4 pullback we've been talking about for many, many weeks. It was shallower than expected, but after a rally of this magnitude, it's probably not so much of a surprise. So what I'm looking for this week, and again, we're up against that weekly trend line resistance, that trend channel resistance. If we were to break above this record high that came in mid-August and then above, let's say, 24,100, it would probably confirm that we have seen a wave 4 pullback and that the wave 5 and the uptrend that we've been sort of looking for after this wave 4 pullback is now underway. And that could see a move up towards 25,000. For the S&P, starting with the weekly chart, you can see that with the fresh record high it struck last week up at 65.32, it's also now testing very important weekly trend channel resistance. This comes all the way, again, back from October 2022. So something to be mindful of before we start looking at this bullish green candle and thinking that it is now going to continue to rally on from these levels. It may do. But what we need to be mindful of is that there is this very important weekly trend channel resistance coming in around 65.30 to 65.50. If it were to break above there, then look, potentially we start to look at this as some sort of, even through here as the wave 4 correction and the wave 5 has resumed. But if we were to see weakness in the early part of this week and a break through these levels, which we struck in August, then you'd probably be looking for a pullback towards this 6,200 level. If we were to break below there, then it could come back into the 6,100 area, which is being reinforced by the 200-day moving average at just below 6,000. Thanks for listening and have a great week ahead.